Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 20th of August. Starting off with 7 Digital, where it's been a pretty rocky ride. High there around 4.8. That trough there, the low there, 2.15. So rather difficult for anybody to survive that, or unless they're a very solid holder. The interest here today probably is if we can get an end-of-day close above the high of that day, the 17th. Which was 3.55, so we're just near that now, and obviously the stock has seen that. Then we could get a retest of the 4.8 zone. Obviously stop losses are almost impossible in this situation, but clearly today's intraday low 2.9 might be a stop loss for anyone who is interested in joining the ride. It would also be interesting to see whether the shares eventually hit that 10p target, which is a January resistance line projection, just about the steepest one you can draw, but be interesting to see whether that will actually eventually be on the cards. Given how rocky the ride is, I would actually say it's probably more likely than less, because as we know, the rougher the ride, the bigger the move. On to a stock which I don't think I've covered here before, but it's a big riser, one of those graphene situations. Here we've got a situation where the shares were actually, when we had an inverted head and shoulders there, so the breakout there at 20p at the beginning of last month. Right shoulder was an extended one, and actually the close yesterday was probably a decent enough late buy signal on a technical basis. Current situation though, after the spike, is that we're hoping that the stock will remain above that old August resistance around 28 pence on an end of day close basis. If it can, then we would eventually be looking for a 2-month, 3-month target as high as the top of the rising trend channel from April last year, heading as high as 70 pence. But the upside only really valid in an easy way while we hold above 28 pence. A couple of stocks I can't resist looking at the moment, because largely because they were described as bearish situations, and it turns out, at least so far, that they haven't been. First is Amigo, where the bounce off, the close above and then the bounce off the 50-day moving average at 9 pence held the key to the latest move. That's there at 9 pence. Above 9 pence, we were looking for 18. We've had 15.5 so far. So 18 is still there, and if you're a fan of the stock and want to cheer yourself up, the big picture target, if we can get through 18 and stay there, etc., would be the top of this broadening March triangle as high as 50 pence. That's the equivalent, I suppose, of 0.6 on the supply me chart that we managed to hit a couple of days ago. On to Bidstacks, and again another one which the naysayers have had a tough time of late, I would suggest. Interesting here that I said break of 8 would take it to 15, which we haven't had the break of 8 yet, and the bull argument valid while we're above 6.5. Rather interestingly enough, the stock has managed to decide that 6.3 pence, not 6.5 pence, is its support. But as that was a guess ahead of time, I think I may be forgiven. So above 6.3, looking for 8, and then 15 on Bidstack as a best case scenario target over the following month that we break the 200-day line at 8 pence, if of course we break it. Next up, a stock which has been rather frustrating for various reasons. The technical one, though, is the line of resistance that we had there to break from February. We had a full storm move there through 3 pence last month, but at this stage it looks as though, combined with the 50-day line at 2.32 and a proper break of that February line, we could head higher. Obviously, there is still some resistance between 3 and 3.2, 3.3 pence, but at least in terms of the trend line break, it looks like Bigdish has finally done it. And with the 200-day moving average starting to rise there, it's just ticked up in the last few days. That may provide added momentum for the shares, as does the recent double bounce off the neutral RSI 50 level. So a bit more encouraging there. 3p looks to be in the can, and we can remain above 3p, the top of the rising trend channel from last August at 6 pence could then be on the cards. Bullish really while we remain above the 200-day line, and that's around the 2 pence level, but ideally we hold above the 50-day line on Bigdish. Itaconix is a request from a follower of Share Talk, and Normally requests tend to be rather sad and soggy, but this one is absolutely, I would say 9 out of 10 or more. We've got this break of the trend line there, the triangle as well, from the end of February. Break of neckline resistance of 1.5 pence, and it looks like we're just breaking this mini flag here, continuation flag, around the 1.8 pence level as last initial peak, 1.75, the initial peak for August. So end of day close above the 1.75 area, could be heading towards the top of that trend channel from the end of November at 3 pence over the next 4 to 6 weeks or less, and a nice risk reward there in the sense that the stop loss really would be just below 1.5 pence for Itaconix. I've been told by long-standing investors that diamond stocks don't normally end happily, but Karelian does seem to be trying to buck that trend. We've got all the near-term moving averages rising beautifully, even the 200-day, and the 50-day rising in parallel with the 200-day, which tends to be a decent signal in its own right. Had a little flag breakout here, a consolidation breakout over the last few days. End of day close above 5 pence should give us the top of the December triangle there at 6 3/4. And if that's not enough for you, there is a larger triangle, which is from February last year, heading to 8 pence. So message here for Karelian, while we're above, let's say, the 20-day line of 4 1/4, we could hit 8 pence as a best case scenario by the end of next month on the shares. Onto a stock which is, I suppose, turned into something of a binary bet given the fundamentals, but we're not looking at the fundamentals here. With Providence Resources, there's been a nice bounce off the floor of this rising trend channel from November. We already broke a line of resistance in a triangle there from January around the 3.5 pence level in June, and had good progress since then, apart from this slightly painful retreat from July peaks. But today the bounce off the floor of the channel at 4.5 pence means that while we're above that, we're looking for obviously a minimum retest of 5.8 last month's high, but the big picture target as soon as the end of next month, hopefully, is a top of November price channel destination as high as 9 pence. Next up, a stock which I've barely heard of. I think I've seen the Epic code hanging around, but not one that I've really been able to look at. Here we've got a spike higher for PHSC. The only wisdom that I can add really, apart from obviously a great move, is that we would hope that new support for the shares would come in at 12 pence or above, if it can, and that was the old January-February resistance. If it can remain above 12 pence, there's probably another shot at 21 or 22 pence, which is the top of that April 2019 price channel. Just a couple of stocks to go now. Staffline, which is has been obviously in the wars, as you can see from the daily chart, and some people might just throw it out the window just on that basis, but at least in the near term, it looks like we've got a trend line falling wedge, well, actually sort of a falling triangle break at 28 pence. End of day close, I suppose, above 30 pence, and the initial August resistance probably provide the comfort to cautious traders. Most of us would be cautious after this, the declines of the shares. So 30 plus could lead to the top of that trend channel from the beginning of the year as high as 55 pence, but maybe wait on a clearance of 30 pence on the 50-day line ahead of that. Last stock of the day is one which I'm very pleased has done well. I've interviewed Colin Bird on several occasions, and here we see that the recent recovery for the stock, although it was very slow, is starting to gather some momentum. Key level in the near term would be that the shares manage sustained price action above May resistance of 1.63 pence. Above 1.63 pence, we're looking for the top of that broadening triangle from March as high as 2.5 pence. So ideally, 1.63 pence remains in place, but only back below 1.5, really hurting the long-dated bull argument. That's it from me today. More updates tomorrow.